Afternoon to you, and thanks for being with us. Just given that we were just hearing from Alistair Darling talking about this whole notion of printing money, what are your thoughts on that whole debate that is being discussed this morning?
Well, I was relieved to hear the Chancellor saying that they weren't actually considering it at the moment, but I think it is something that might, in the final analysis, have to be considered. It depends how bad things get, because the real problem is not the cost of money, it is the availability of money. And in an extreme situation, it might be necessary to have what they call quantitative easing. But, of course, the great problem about that is how you end it, how much you do. At what point do you stop doing it? At what point do you decide enough is enough in order not to control inflation? Because that is the great danger of printing money or having quantitative easing, as it is called, that you just create inflation. And it's very difficult to know how to exit from that situation once you're in it.
It's interesting, the Treasury and Alistair Darling not ruling it out at any future point. I mean, would you agree with what George Osborne has been saying from your party through the course of this morning? He was saying printing money is the last resort of desperate governments when all other policies have failed.
Well, it is the last resort, and I suppose of desperate governments. But I think you can't rule it out entirely, and from what you've said, George Osborne wasn't ruling it out entirely.
In terms of the interest rate decision we have just had, the right move, a 0.5% cut?
Well, it's really what I expected. It is an extraordinary situation that we are in. I mean, I believe this is the lowest that interest rates have been, first time being below 2%. It is a most extraordinary situation which underlines the seriousness of the situation we're in. I do think the problem is not the cost of money, it is the availability of money, and what one has to hope is that the interbank market does continue to ease up, making it possible for banks to get access to money in order to lend. What worries me about very low interest rates is that, of course, they're not attractive to depositors, and therefore the banks can't attract the money to lend. I wouldn't like to see interest rates go much lower unless we really are faced with a situation of a deflationary spiral.
So much of this is about confidence. You spoke about the interbank rate, and there is considerable disparity now, or even more so after today, between the Bank of England base rate and that interbank rate. I mean, what needs to be done to actually get banks lending to each other again, that basic thing that drives everything?
Well, it is, as you say, confidence. It is knowledge that the banks are sound. What needs to happen is that the banks need to declare finally, as quickly as they can, what the losses they've had on impaired securities, private equity, subprime mortgages. We need to get it all out in the open so that people know what the position of each individual bank is. So I'm afraid there's an element of time in this. And that is another point I would make quite generally about this whole situation. There is so much being done by each government in each country, just chucking money over the wall and cutting interest rates drastically without waiting to see what the results of these policy measures are. And nothing works in under a year and a half, a year. You know, I do think we've got to have a bit of a pause at some point to see what is happening.
And yet, it's not a direct response to that, but government officials have been talking through the course this morning, of course, Gordon Brown in Liverpool, justifying, obviously, the approach they are taking. And they were making the point back in the 90s with the Conservatives, they didn't invest as much money as the government is currently doing, and they simply left people to languish, to lose their jobs and not help them. I mean, isn't that the danger of what you've just said, is to wait to see, say 12 months to see if the variety of measures have worked, and then only to act again when perhaps they don't? I mean, there is a danger there, isn't there?
Yeah, but you can't just go on cutting interest rates, spending more money, borrowing more money, just because it doesn't produce a result in 30 seconds. You have actually got to see whether it is effective, and I am concerned just about the amount of money the government is borrowing, which I think could impede the recovery.
Okay, well, Norman Lamont, thanks for joining us here. Thank you.
And just to remind you, down there the base rate to 1.5%. It is the